Alright, very good morning everyone. It is approaching 8:20 a.m. Eastern Time, Friday morning. Guys, I've got a fantastic trade setup here for you. Look at this, SPWR. This is a solar stock. Look at this. First, let's look at the weekly chart on the right hand side. Moving averages are pointing upwards. We are oversold. We've come back down in recent months since the beginning of the year, and we're into this level of support. This pivot level here is a level of support which price has held in recent weeks. Let's zoom into the daily chart on the left hand side. Look at this. Remember, what do I always say? I want a nice tight arrangement of candles. Look at these candles. All of them are green. All of them are small, and they're going sideways, and look what's happening to that daily 20 moving average. This stock is about to run, I reckon, up to around the 840 or 850 level. Let's look at the monthly chart as well, because we want to consider all time frames. Looking at the right hand side. Okay, so on the monthly time frame, we've been in a steep downtrend. We hit the 20 moving average here on the monthly chart back in the summer. Last year, we've touched it again, and we've reacted to it, so we've come down. However, we are holding this support line. Let's go back to our weekly chart. So we're into this level of support, and this thing is telling us it's about to run. Let's look at the hourly chart on the right hand side. Look at this. We're above that rising now hourly 20 moving average. This stock should be running. Before we get into the options, what we're going to be trading, I want to look at TAN, which is the ETF which tracks the solar stocks, and I want to make sure that what we're seeing on TAN is consistent with what we've seen on SPWR. So TAN, we're at the high end of the chart, so SPWR is pretty cheap and well oversold, and it's lagged the market, or it's lagged the sector. So TAN is in an uptrend. Look at this, we're above the rising 20 moving average, so TAN should really now start making a move to the high with the SPY. Let's look at the SPY in pre-market. We're more or less unchanged, but this is positive action. As we approach the month of April, this price of the SPY should be going higher. So back to our SPWR. Now, there are two ways to play this. The first one is a high-risk play. So use a small size, but look at the alpha we're hoping to get out of this. So I'm looking at March. Now the March expiry is 1 week away. I'm going for the 750 call, but again, I'm using a small position. It's currently worth, let's say, 25 cents. And if by this time next week we get up to 840, 850, which there is a chance, the option will be worth approximately $1 or just under. And if we get it for, let's say, 20, 22, 23, 25 cents, we will make a 300% return. That will be a 4 times return. Again, it's a high risk play. So whatever amount you put into this, make sure that if for whatever reason this thing fails and the options expire worthless, that it will not damage your account. Especially for those of you that are newer to this methodology, again, more than doing this to make the profit or the money, we're doing this to get the experience of how these high risk plays work, what it feels like to be in them, what it is like to identify the chart pattern and watch and wait as it plays out. I implore each and every one of you, do not do a big position. Okay, for this one that expires in a week's time, do a smaller position. If it goes wrong, it will not dent your account, and more importantly, it will not dent your psychology. Because if you mess up and you take a big risk and you lose, it will mess up your psychology for a long time, and then you'll start revenge trading, and that will mess up everything, guys. Okay, now for the less risky play, what I would suggest is the April expiry. So this we can do as a sort of main position, and I would go for the 7 strike, which is around 60 cents. So if this thing does get up to 850, we're giving it around 5 or 6 weeks, the option should approximately double and go up 100% in price, providing we make it up to this level relatively soon. If we sort of drag our feet and it takes time to get up here, then the option would need to be worth at least $7.60 by the April expiry to break even, which this is a lower risk play. So I may actually end up doing 2 positions. The main position would be this one, the April 7 strike. But guys, this is a really great setup. This is oversold. We've looked at all the factors, we've considered it from every angle, so I'll let you know what my entry price is. But again, if you're doing that high risk play with the March expiry, it's only a week away, use a small position. Okay, guys, let's catch up soon on the Facebook page, and Hope everyone has a great trading day. Thanks a lot, guys.